How to start saving right now. Starting saving can be rather intimidating, and one of the most biggest reasons is that many people don't know what they can invest in or how to get started. So, here are some of the most common ways to invest money. Number one, stock. Almost everyone should own stock or stock based investments like exchange trade fund, like ETS, and mutual funds. Stock have consistently proven to be the best way for the average person to build wealth over the long period of time. US stock have delivered better returns than bonds, savings account, precious metals, and most other investment types over the past 4 decades. Stock have outperformed most investment classes over almost every 10 years period in the past century and have averaged annual returns of 9 to 10% over long period of time. Number two thing you can invest in is exchange traded fund, ETFs. Sorry. If you are worried about researching and selecting individual stocks, an alternative is to invest either exclusively or partially in ETFs and or mutual funds. For example, if you invest in an S&P 500 index fund, your money will be spent out among the 500 companies that make up the index. So if any one of them were to fail, it wouldn't be devastated. Now, number three, mutual funds. Mutual funds are similar to ETF. They pool investors money and use it to accumulate a portfolio of stock or other investments. The biggest difference is that ETFs trades on major stock exchange and you can buy shares wherever the stock market is open. Mutual funds only price their shares once a day and aren't nearly as liquid. Now, number four thing is bonds. Over the long term, growing wealth is the most important step. But once you have built that wealth and gotten closer to reaching your financial goal, bonds, which are loans to a company or government, can help you stay there. There are three main kinds of bonds, which one is corporate bonds issued by companies and municipal. Is it municipal now? I don't know. If I remember, I'll put it up. I'll write it up here. Bonds issued by states. I think it's issued by state and local government. And we have treasury notes bonds and bills issued by the US government. You can buy individual bonds through most major brokers, but for most investors, the best way to go is to buy ETFs and mutual funds that invest in bonds on your behalf instead of you trying or looking for it to buy yourself. Number five, high yield savings account. Savings account offered by branch-based bank are notorious for paying molecules, right? Interest rate. However, some excellent bank primarily based online offers very competitive rates to the point that they can be considered investment worthy in many cases. Now, number six, certificate of deposit, which is CDs now. Many reputable banks offer some excellent high yield certificate of deposit that pays guaranteed yield for anywhere from a few months to 5 years or more. Unlike savings account can allow you to lock in a specific yield for a set period. Let's move to number seven, real estate. Like owning great companies, owning real estate can be a wonderful way to build wealth. In most recessionary period throughout history, commercial real estate has been counter cyclical to recession. It's often viewed as a safer, more stable investment than stock. There are ways for people at most every financial level to invest in and make money from real estate. The most obvious is to buy rental property, which can be a great way to build wealth and create an income stream. But it isn't the best fit for everyone, as much as not every investment is the best fit for all of us. Unfortunately, there are alternative ways to invest in real estate, many of which are much more passive than actually becoming a landlord, such as real estate investment trust, the REITs. Number 8, cryptocurrencies. Cryptocurrencies are a relatively new form of investment vehicle. Popular example include Bitcoin, which is the BTC 0.49%, and Ethereum ETH 0.80%. If you have knowledge of cryptocurrencies, they can be incorporated into a diversified investment portfolio. So your apart from investing, and then you need to there are some few keys you need to check before investing, which is number one, your risk tolerance. You need to check on your risk tolerance. Number two, you need to check on your time zone. If this particular time you are investing, is it the right time? Maybe you have a child about going for college or heading to school. Is it the right time to invest my money? And of course, number three thing you need to consider again, the amount you are investing. If you have checked your risk tolerance, you should know the amount you are willing to invest, that it wouldn't break you if anything should happen to the investment. And of course, number four now, your knowledge level. You have to have a certain level of knowledge of what you are investing in. Even if you're investing as an individual, especially when you're investing as an individual, your knowledge level is key. But if you're not investing as an individual, you're investing through a broker, then it is easier that even if you have a minimal knowledge of your investment, it is still safe. But if you are investing on your own as an individual, your knowledge level on your investment is in fact is a must key for you to attain before investing. So I hope you enjoyed this video. If you do, please subscribe to my channel, and of course share, like, so that the algorithm could recommend my video to other people. Of course, we all need to know one or two things about investment, especially in this recession time. And thank you. I will see you on my next one.